Hello, and thanks for joining us today. I'm super excited you could be here. Look, today I'm bringing you a lending source that in an industry you didn't even know was probably fundable. You probably didn't even realize that you can get capital in this stream. I know because a lot of people come to us and ask and have given up hope thinking they can't get funding in a phenomenal, very prosperous growing industry, which is the cannabis industry. And today we have like the foremost lender leader in that space to break down, first of all, a lot of knowledge with funding that he's actually gained along the way in consumer and commercial funding, but also especially what's possible in the cannabis industry. So this is going to be an episode you absolutely are going to love. I'm so excited to join in. And with us today is Adam Stettner. Now, Adam's actually a seasoned financial services entrepreneur and the founder of FundCanna, which is actually a leading capital provider to the cannabis industry. So after building Reliant Funding into one of the largest small business financing companies in the US, he actually identified a major gap in the cannabis lending and launched FundCanna back in 2021. Now, under his leadership, the company has underwritten over 6,500 clients and approved more than $500 million in funding, become the largest non-bank, non-real estate funding source in that sector. So across his career, him and his team have delivered over $6 billion to more than 200,000 businesses and reviewed over 1 million small business financial profiles. He's raised 300 million in equity and debt financing, demonstrating deep capital market experience as well. And he's earned recognition from Inc. 5000 and is named the Ernst Young Entrepreneur of the Year in San Diego. Adam, thanks for joining us today.
Thank you very much for having me, Ty. That was quite the intro.
Well, I mean, look, it's a smidge of what you've actually accomplished. So congratulations on both FundCanna and Reliant. I mean, Reliant Funding is a well-known company in the space. So congratulations on all your success.
Thank you. I appreciate it.
All right, so let me ask you something. Like, it's really interesting to me that you're in the cannabis industry because you understand as well as I do how the difficulty of a sector that is to have gotten financing historically. So, what made you make the leap and decision with all of your experience in the consumer and commercial side to get into the cannabis sector?
Well, exactly what you just outlined. I I have, if I look back, I was in student lending and there wasn't really there. I mean, you have Sally Mae and these monsters in that space, but I felt like there was a gap that students and their parents were underserved with a higher service, better understanding of their need. And so I designed product around that. And then in SMB and small and medium business lending, same. Banks are amazing at what they do, but they service such a small subset of the business market that I felt I could help fill the gap by designing product, marketing, sales, and support that would meet business owners where they were. During the pandemic, there was a story on CNN, and I'm sure you and your viewers recall, we're all forced to be at home. Right. Everything was closed. My business was forced to close, 250 employees, all at home. We had 5,000 to 6,000 active clients in our book. All of them were forced to close. And I'm sitting at home on my couch, and CNN runs a story that cannabis is deemed essential. And I'm thinking to myself, how is that possible when it's federally illegal? And every other business is forced to close. And if the federal government doesn't acknowledge that it has some kind of medical value, why is it essential? But one thing led to another, and I went down the rabbit hole of understanding how are they supported by banks, how are they supported in terms of accessing capital, and what I learned was they weren't. And so I started exploring and studying and learning all I could about supply chain in cannabis, and the economics. I even traveled around and visited growers, manufacturers, some brands, and of course, a bunch of dispensaries, and ultimately decided to give notice to my board and my PE firm and start FundCanna. And that's what I did in the fall of 21.
Wow, I love it. I love that story of how you actually got started, and it's so true. But one of the things I think is interesting is so many in the alternative funding space are basing money based on revenue, and it's based on bank statements, for example. But I mean, you're talking about an industry that a lot of them can't even put their money into banks. So give me an idea about some of the difficulties that you've navigated being able to launch, grow, and obviously scale to a pretty significant amount so far.
Yeah, so actually it's somewhat misleading. And what I'll say is banking is difficult and complicated, but it's available. And so I don't want to downplay the fact that that banking in cannabis is limited and a bit restricted and maybe a bit more expensive than non-cannabis. But it is available. And so of the 10 to 12,000 banks that bank traditional SMB, again, small, medium business, there are about 900 to 1,000 that will bank cannabis. Now they're banking it really as a deposit institution. Um, Maybe 5 to 10 of them will lend, but usually against real estate, rarely just traditional business lines. But there are 1,000 that will bank them. And then there is a whole subsector of armored transport and cash movements so that if you're not near one of those banks, you can get the money to a Fed deposit institution that will then get the money into your account. Now, again, is it easy? No. Is it inexpensive and convenient? No. But the industry is banked. And so it's, I think, a bit misunderstood. You're right to ask the question, Ty. But it's a bit misunderstood. And there's legislation moving through the lawmaking process right now with a lot of sponsorship. But I have to say, it's the eighth time that the same legislation has been put in front of Congress. 7 times it's not passed Senate. And the eighth time, hopefully, will be a charm. But that would open banking much more widely than it is right now. Now, having said that, just to answer your question more directly, we only work with clients that are banked for the reason you gave. There is very difficult. I mean, we do a lot in the way of underwriting. It's not just revenue based, although it's a primary piece. Really, in any lending environment, you have to look at inflow of capital before you can determine what the right outflow for debt service will be. But we can't underwrite someone that isn't banked. But I will say that for those that haven't been banked, we've been able to get them bank accounts, get them established without much hassle, and then subsequently work with them.
So let me ask you this: the piece that you talked about, revenue is a piece of it, but not the whole. So when you're looking at a borrower, and you mentioned earlier a lot of different players in the space, who is your typical borrower? Who is it that you're lending to in the actual sector itself? And let's start there. Like which of the players are you typically lending to in this space?
So you'd be surprised. There are two ways that I would create a profile for the typical client. The first is what do they do? Where are they located? How big is the organization, et cetera? And then the other is the individual operator or operators, right, that are applying on behalf of the organization. In terms of the operator, we the company, the operating entity, we service the entire industry. So if you think of the supply chain, at the top of the supply chain is cultivation, at the bottom is retail, and then everything in between: manufacturing, processing, brands, distribution, etc. And then off to the side, you have ancillary: packaging, lighting, nutrients, armored transport, all of these other areas that service the industry. We service all of that. Now, I could break down and tell you, break down our applicant profile and say about a third of our applicants are vertically integrated, meaning they do more than one thing. They might both grow and manufacture, or grow and have a dispensary. And then about 20% are retail only. And then the rest is evenly distributed across, but the two biggest are vertical integration and retail. And then typical client time in business, just over 5 years, believe it or not, even for such a young industry. And that includes people that are 6 months old. That includes people that have been around since Colorado and Washington legalized way back in about 2012.
Wow.
And then top line sales. The average client, and the median's not far, but the median's higher. But the average client is about 5 million in top line sales. However, I'll say the largest client we've worked with did over 500 million top line annual, and the smallest about 300,000. And so that's a ridiculous range, and that's why I give you that average. And that is what I would say is the typical client profile, right? Is they could be in any vertical with an average of 5 years, but greater than a year is preferred. And then doing about 5 million in top line sales, which for this industry is the average.
So in that, and I really appreciate the detail because there's a lot of information there that I think is really invaluable from like the lowest end that you typically see to the highest. So with that being said, what are you looking at? Like, what is the profile? We talked a little bit about that you're helping everybody that's even in the primary and the ancillary services to the industry. So what type of information are you looking at to make an underwriting decision?
So we look at a ton of stuff, but what's nice is a lot of that we can do. It's passive on the part of the applicant, meaning we're doing the work on the back end. And given my past, a fair bit of experience in terms of where the points of friction are, not only for us in underwriting, assessing risk, approving and sizing the offer, but also for the client. And our job is to make the experience for the client as pleasant and friction-free as possible. Operating a business is hard enough, and the last thing that I want to do is be an area of friction. And so we have the ability to underwrite online using technology, and we can do that in give or take about 7 minutes. But in that time, what we're looking at personal credit, and that credit is not just a score. And I think that that's often misunderstood, Ty, even among business owners. The score is part of it. And we look at FICO score. We look at something called One Score, which is a proprietary score from the bureaus. But we also look at trade credit, thickness of a file, types of file, the amount of leverage that's been taken. So what would be debt to income in consumer? We're really looking at just how the individual is using money and cycling money. And we do all of that with automation that we've created here. But then we also look at criminal background, and that's important as it relates to cannabis in particular. I'm not worried about cannabis convictions, but we look for financial crime, violent crime. I think a lot about who we give money to and whether or not A, we're going to be repaid, and B, what the association is. And then because cannabis is still technically federally illegal, I want to make sure that I'm doing all the diligence around anti-money laundering laws, and that criminal background is part of that, but also what they call KYC, know your customer, or KYB, know your business. And so although I'm not a bank, I am not a bank. We want to go through the motions that banks would go through so that banks can refer business to us, and we can satisfy what's called FinCEN, the Financial Crime Enforcement Network, which is a federal arm of the government, that what we're doing is being done above the table to the letter of the law, and that we've done our diligence and been thorough. Now, we do all of that for compliance, along with license checks, Secretary of State checks. But we're creating from financials, inclusive of bank statements, ratios, inflow, outflow of money, number of deposits, number of withdrawals, and we build patterns of the statements over time. So if someone gives us 6 bank statements and let's say a balance sheet or a P&L, we scrape all that data and put it into formulas that give us ratios that we then use to make decisions, not only on approval or decline, and our approval rate is north of 70%, believe it or not, but also on how we size the offer, because it's not just about getting to an approval. It's about getting to an approval that doesn't over lever your client. And I think it's very important from my perspective. It's always been important, consumer, commercial, and now in cannabis, that we don't put our client in a position where the repay becomes a burden. It's critical. And so giving the right amount relative to all of those ratios is important. And I think there are a lot of even traditional lenders, they have a credit box, but it's not a two-way mirror, right? They just look at what the box tells them and that's their answer. I prefer very much to think about the client, because if they're not happy, they're not going to come back. And unlike traditional lending, where there may be a deposit account and all kinds of other aspects or tentacles of a relationship, for me, this is the only relationship I have. And so I want to do the diligence, make sure it's right for me, make sure I'm compliant with the law. And then I want to make sure that the offer I make is right for the client. It works well for what they're trying to achieve, so that the repayment associated with that capital feels good. The capital helps. And then we look at metrics as part of the underwriting. So let's say you're in Florida and you are a cultivation client. We've got a lot of data associated with what we've done over time. I love data. So I want to look then at, okay, when we fund cultivation clients on the west coast of Florida, what does their growth rate look like? What is the bounce rate for them? Meaning, are they stressed? So do we want to adjust our box so that the offers are different? And then if we see that it fuels growth, that's amazing. Then the next time a West Coast Florida cultivator comes in, we look at it through the lens of our prior experience and how it's helped, based on not only where they are and what they do, but the profile of the rest of the file. And when we get lookalikes that make sense, it becomes easier for us to understand how best to not only approve or decline, but size the offer accordingly. Hopefully that wasn't too much of a drone on.
No, I love it. I mean, a lot of, our tribe follows us because they want to understand from a lending perspective why they get approved, why they get declined, how decisions are made. And I feel like a borrower, the more of that information they have, the better they can improve their own profile to get closer to the terms, the approval amounts, these kind of things that they want to get. Speaking along that lines, when you talk about terms, and I love about how you talk about it in a way that it makes sense for them, and it makes sense obviously for FundCanna as well. What kind of terms do you offer? What type of range is there with terms that you offer when it comes to loan size?
So first, and I'll answer that directly, but before we do, I think what I learned over a couple of decades now is the best way to do ultimately right for my company and investors is to first do right by our clients. And I'm not stealing the line from Bezos with obsession about client satisfaction, but it's true and it works. And in lending in particular, or funding of any kind, it's very important. And we're not limited by like a large institutional board of directors. Most banks have a credit box, and either you fit the box or you don't. They have their product, and either you want to use their loan product or you don't. And so for us, one of the things that I noticed that's very unique to cannabis is payment cycles, terms do not match revenue cycles. And by studying the space for a year and trying to understand how the supply chain works for a year, you ask a lot of questions. If you pay attention, you learn. And what I saw was there was this disconnect. Bills are due either COD, cash on delivery, or net 30, meaning 30 days after you take delivery. But revenue cycles are between 3 and 8 months. And so right away, something's broken. And cannabis has a delinquency issue with accounts receivable, where the legal cannabis industry is about 30 billion annually. The illicit market is a lot larger. But on that 30 billion, they have about 4 billion in delinquent AR. That is crazy. 11, 12% of what this industry sells doesn't either get paid on time or at all. And so my theory was, and this will lead me to terms, but my theory was that the reason there's so much delinquency or non-payment, it's not because the operators are bad people or the businesses that underlie are bad business. It's that the terms that they're being given don't align with their revenue creation. And it's very hard to pay your bill if you don't have income. And so what I did was try to design product that gave terms way beyond revenue cycles for comfort of debt service, but that also gave the flexibility to pay back anytime they wanted without penalty. That is highly unusual in any category of funding. It's most often there's prepayment penalty or a minimum repayment level. And we don't do that. So our clients pay only for time used. And so we'll write terms that average between 12 and 24 months. 13 is most common. Not the number I'd pick, but that's what our clients have picked over time. So a 13-month term. But that 13-month term averages repayment in less than 8 months. And 50% of our clients pay early. And when they do, they pay about the 4-month mark. So you've got half of our clients using the money for 4 months. And within that 50%, they average 4 months. We've got some clients that turn the money monthly. They draw and then they pay back 5 weeks, 4 weeks, 6 weeks later. And they're only paying for time used. And what's interesting about that is they're using it exactly as I hoped they would, which is, so the term, as to answer your question directly, we're typically offering 13-month is the blended average, and that's dollar weighted. But clients are using this for, if they're manufacturing, they use it for raw inputs. If they have retail, they're using it to purchase inventory. If they're cultivators, they use it for their grow cycle, buy nutrients, pay for their utilities, pay for the cycles of staffing. And then when they derive their revenue, they're servicing the debt in micro installments. And then when they derive their revenue, they pay it off and they start over again. And it becomes a line item in the P&L for that batch of whatever it is that they're selling or producing revenue for. So I would say on average, let's say the margin at retail, let's use retail given it's one of our largest single verticals. If their margins range between 45 and 60%, and they use my money, let's say for arbitrarily 3 months, that might cost them anywhere between 6 and 10%. But now they didn't lay out any capital to fill their shelves. And if let's just pick a low midpoint of 50%, if we charge 9 and they earn 50 on our capital, they're using my money to make 41%. And that cycle works phenomenally well, because now instead of tying up all of their own money to purchase the inventory and waiting 3 to 4 months for it to sell through, they didn't tie up any capital. They filled the shelves. They're selling inventory as clients come in, and then they're slowly repaying us as those sales take place. That is the way the majority of this industry is using our capital. Or the other way is bridge money. So there's oftentimes they're buying a piece of real estate or they're opening another door. Traditional real estate lending might take 4 to 7 months. 4 to 7 months to close. We might float them the capital until that closes so that they can get started on their build out. And that expedites timelines dramatically. And then when real estate financing comes through, they'll pay us off. But I would say that's maybe 5 to 10% of the use case is bridge money. And 90% is operating capital, which includes inventory or input costs.
Everything you said is brilliant. It's so interesting to me in a couple different things. I'm listening to you and I'm like, wow, first of all, most in the industry or most in fintech do not focus on an industry. They do not focus on a sector. And then when I hear you talk, like it literally sends like my hairs on my ends, my arms stand up, because it's like when you do what you've done, which in itself is completely unique, then you almost have created your own financial instrument for that entire sector that works in a way that I've personally never seen. I've never even heard this done before. I mean, you're literally understanding from inside the sector the problems they have, and then are creating an instrument specifically to solve that in a really, really unique way. I mean, it's brilliant. I don't even know what to say. I just never heard of anything like this before.
Well, listen, I appreciate you saying that. So thank you. And thank you for recognizing that we're making the effort to understand the client. We put a lot of time into doing that. I'll also tell you 25 years of putting money out to consumers and to businesses. You learn a lot about what works and doesn't work for them. And you learn a lot about what gives them a great experience. My belief is if you really study a space, there's a way for both parties to thrive. Meaning there's a way for me to have low loss rates and decent margin while assisting the client in a way that's very meaningful, and not words, but action. And so what I'll say is across, give or take, we're just about 5,000 funded clients or funded files, transactions. And when I look across all 5,000 of those, including some that, let's say, we funded today, if I look at all of those and throw them in a bucket and weight the each file based on the amount we funded, the average client has grown after we fund them by over 50%. And that is a shocking statistic even for me. Now it varies. We'll go as low as 48, and we've been as high as 71% growth among our portfolio. But that means a client that's doing, for simplicity of math, 10 million in top line sales at the time we initially fund them is now doing 15 million in sales, which shows you when you match a product to the industry or the client's need, you still have to risk adjust properly. You still have to size it right. You still have to do all the things as a steward of risk management. But if you really build the thing they need, it does unlock their ability to grow. And this industry was hamstrung by that cycle of paying bills before you derive revenue and then having that money stuck. It's very difficult to grow when your money is locked. So by unlocking it and creating this flexibility that moves with their sales, it fuels their growth. And that's exactly what I was chasing. So it's been very rewarding to see it work, and to have clients come back. Our repeat rate of clients is approaching 300% in just 4 years, which means if I were to fund a client $1, just again for demonstration, the lifetime value of that client is already $4, $3 additional dollars, nearly. It's about $2.80, but roughly $3 behind that first dollar, which to me is a sign that they feel it and see it working. And I think that that's critical, because if it didn't work for them, I know over time it's certainly not going to work for me.
Yeah, it's interesting you bring that up, because it was literally going to be my next question was like, when you're doing what you're doing at the level of success you're doing it, and the level of care for the borrower you have, which is extraordinarily rare, then you can usually the proof of that is when they're coming back and being able to get more and more funding, because you're a trusted partner. You're legitimately solving one of their biggest problems. Adam, I could talk to you for so long. I love what you've done, and I'd love to bring you back another time to talk to you about in general, because I just think that the way that you look at the problem, the industry, and how you look at funding is so unique in the problems that help solve in the sector that you're in. But so many others, I think, could learn from what you do. But those that are watching this and interested in getting in, they're in the cannabis industry now, they're thinking about getting in it, down the road they want to contact you, or they're ready to contact you now, what should they do to be able to get in touch with you and your team?
So I think in a lot of ways, right? Our website, fundcanna.com, fundcanna.com, is a great way to learn a little bit more about what we do, who we are, the products we offer. And then 844-420-FUND, FUND, is the phone number for the organization. And then by all means, I mean, look me up on LinkedIn. Follow the company on LinkedIn. We put out a lot of info all the time about what we're seeing, trends, regulation, and ways that we've been able to fuel growth for others, just as a way to get ideas for your listeners. So all of those are available.
Perfect. Thank you so much for coming on with us today. I really appreciate it, Adam.
Yeah, thank you, Ty, for having me. I appreciate it.
All right, so listen, if you're watching this, we've done nearly 1,000 episodes, and we've had a lot of funders, hundreds and hundreds and hundreds of funders on here. And what you've heard today is so unique from Adam's perspective, not just in a sector that he serves, but in my opinion, how really I wish all lenders would look at lending with the level of care and interest they have in those that they serve. And then the result is you have somebody, if you're in this industry, that can really help you and be a partner with you, that can help you all through the growth of what you're doing. And by understanding where you are, your cycles, how your business operates, they're able to lend to you now with common sense lending. I mean, I don't want to tell Adam his rates are too low, what he said, but they're too low from what he tried. I mean, it's ridiculously affordable money that helps you considerably grow at a level that you probably wouldn't have if you didn't have a partner that understands the trials and tribulations that you go through in the sector, and then literally creates a product and environment to help you actually grow and prosper in what you do. So if you're in the cannabis industry, if you're thinking about getting in the cannabis industry, you should go to fundcanna.com right now. And if you go to FundCanna, go to the bottom first. It takes less than a minute. On the middle of the page near the bottom, you'll find their social channels. So take less than a minute and go and subscribe there. Then at the top, you'll see About. And if you click About, there's a whole menu of all kinds of information you'll be able to get about FundCanna, and you'll be able to learn more about their mission, more about what they're actually doing for the sector, including their media, amongst many other things. And most importantly, when you're ready to actually go and get approved and talk to the team, all you have to do is click the button. You know me, I'm colorblind. I think it's orange. It may be green. It's one of those kind of colors that says, help me qualify. You'll have to go to the page and then you can tell me exactly what color it is, but click help me qualify to find out what you can actually qualify for today. So make sure you check it out at fundcanna.com. That's fundcanna.com. Thank you very much for tuning in. Take care and have a great day.